Hey veterans, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer in Raleigh, North Carolina, and a United States Marine Corps veteran. Today, I want to talk to you about your credit score. I know this is a fun topic, right? It's private, it's personal, it feels kind of dirty, but guess what? It's important to your ability to qualify for a mortgage loan. Here's a little teaser. It's about more than just the score itself. But today, I'm going to talk to you about how your score impacts your eligibility period and how it impacts the terms of your mortgage. By the end of this video, you will understand everything you need to know regarding credit scores, credit reports, and how it impacts your VA loan. Before we dig into today's topic, please subscribe to my video. I post videos routinely regarding all topics VA lending and mortgage lending. My contact information will also be in the video description and a pinned comment below. Thank you very much. Okay, so on a very baseline level, your credit score can dictate whether or not you can get a VA loan or a mortgage at all, right? If you have a 450 credit score, it's going to be very, very difficult for you to get any kind of a mortgage. As your score increases, so do the odds of you being able to get a mortgage. For the most part, if you have a credit score over 620, you're going to have good odds of getting qualified for a VA mortgage. If you're below 580, it will become increasingly challenging to do so. Now, good news for you as a veteran, VA loans are more permissive than other programs in terms of low credit scores, right? FHA is also pretty forgiving, but the VA loan can do 100% financing with, let's say, sub-mediocre credit, maybe not terrible credit, but we'll call it poor credit, okay? Now, if you have a 621, it doesn't mean you're guaranteed to get approved for a VA loan, but the odds are better if you have a 621 than if you have a 579. And what exactly does the approval mean? Well, on a VA loan, as well as most mortgage programs, the first goal is to get an approval by the computer, right? We call it an AUS, or an automated underwriting system. It's just a computer program that analyzes everything about you as a borrower, right? Your debt to income ratio, your available cash, your credit score, the contents of your credit report. This is really important to keep in mind because most people just assume the score itself is everything. Well, these computer programs will also review the data in your report. And it's actually pretty easy to manipulate a score, get a score up, a credit score up, but you can't just delete or ignore the contents in the credit report. Keep that in mind. We're going to touch on that again in a few minutes. Okay, why do you want computer approval? What's the big deal? Well, if I run your file through an automated underwriting system and I get the thumbs up, then it removes discretion from the remainder of the analysis. What do I mean by that? So if the computer gives you the thumbs up, then no one can question whether or not you are a good credit risk in the eyes of the VA. No one can come along and say, I still don't like this file, right? You are approved. The only work left to be done is essentially to confirm that whatever you have represented as your income, assets, credit are in fact accurate, right? But it's the real bulk, the big question has already been confirmed. We can hang our hat on that computer approval. Computer approval is much more likely with a higher credit score than it is a lower credit score. Now, what if the computer says no, says you can't get a mortgage, you're not eligible for automatic approval? It doesn't mean you can't get a mortgage. It just means you shift into a different category of what we call in the industry a manual underwrite. What's a manual underwrite? That means that an underwriter is reviewing your debt to income ratio, your credit, and other things about your application against hard categories with hard limits and hard restrictions. It just makes it more difficult to qualify. Also, when you're doing a manual underwrite, various investors will have different caps for your debt to income ratio, or maybe for your LTV, which is a fancy way of saying down payment, right? They may make you make a down payment if your score is low enough. Or in that manual process, other requirements could kick in. They may want you to have reserves. Like I said, maybe making a down payment. Maybe they want you to have extra money left over every month, right? All these things are looked at on a manual underwrite, and they're not really looked at once if the computer gives you the thumbs up. Okay, so that is more or less all you need to know about how your credit score impacts a computer approval. I mentioned earlier that it's not just about the score, right? You could have a 681 credit score and still be denied by the computer if you have bad things in your credit report. An obvious one would be a foreclosure or a bankruptcy within the last 24 months. But let's just say you have a lot of late payments or you have a really high credit utilization. Even if you have a decent credit score, the computer may look negatively upon that content. So it's not just the score. So if you have a 691 credit score, you shouldn't assume that you're in the clear. You're still going to want to get pre-approved early to make sure that you are in the clear. Now, if you have over a 741 credit score, it's probably going to be pretty difficult to have that high of a score with a lot of negative information. So you have less, there's less risk of you having high credit and getting denied or having to get pitched into that manual underwrite category. Still a good idea to get pre-approved ahead of time. Okay, so now we know that your credit score and your credit, the content in your credit report can impact your ability to get approved, period, right? Now, what else does it impact? It impacts your interest rate, right? I'm sure most of you were aware of this. The higher your credit score, generally speaking, the better the interest rate. The lower the credit score, generally speaking, the worse the interest rate. On most VA loans, you're going to get the best interest rate possible with a 720 or above. Does that mean that there's no point in having higher than a 720, like a 740 or 760 and 800? Well, from an interest rate perspective, there may not be any benefit. But the higher your credit score, the higher the computer is going to let you go in terms of a debt to income ratio. What does that mean? That means you're going to be permitted to have a higher budget despite the fact that you have a high debt to income ratio, right? Now, maybe this doesn't seem that important to you, but if you're transitioning out of the military and you don't have a job yet, right? From the snapshot of what income we have available, you may have a very high debt to income ratio. Maybe it's 65%. Maybe it's 72%. If you have perfect credit, you could get approved for that, right? It's not going to slow you down. The lower your credit score, the lower the permissible debt to income ratio. So that higher credit score could give you more flexibility, and that flexibility could be important depending on what you have going on financially at the time of your home purchase. Another thing to keep in mind, if you're purchasing a home over $806,500, then some investors have what we call overlays or restrictions on top of the VA guidelines in terms of what you can do, right? They may kick in additional credit score requirements, or your debt to income ratio might need to be lower if you have a lower credit score. Long story short, it never hurts to have really high credit. Okay, so what if we have to put this all into a nutshell, right? Put it on a business card. Your credit score dictates how you can get approved, whether that's a manual underwrite or a computer approval. It dictates whether you can get approved at all. It dictates your interest rate, and it could dictate your budget. It could cap your budget because it will allow you to have a higher or lower debt to income ratio. Always a good idea to have perfect credit. It never hurts. If you have any questions for me about your credit or strategies to repair your credit, please contact me. I will leave my contact information in the video description and in a comment below. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer in Raleigh, North Carolina, a United States Marine Corps veteran. I am licensed to do loans in South Carolina, North Carolina, and Virginia. Please reach out to me if you'd like to get pre-approved or if you have any questions about your credit and how it may impact your ability to get a VA loan. I look forward to hearing from you.